Mr. Hurt.
Thank you, Mr. Chairman. Thank you again, Chairman Bernanke, for your appearance today and your being willing to stay so late to answer our questions. As I said in my opening statement, I represent a very rural part of Virginia, and we have dozens and dozens of main streets with dozens of small or hundreds of small businesses, small banks that provide capital so that those businesses can succeed. I think we all would agree that their success will drive our future economic recovery. And I was wanting you to comment on your view of the atmosphere for lending by small banks in our rural communities, and was wondering if you could talk about that in the context of the regulatory structure that they have to deal with, the banking regulatory structure, as well as the upcoming implementation of Dodd-Frank.
Well, first of all, I agree with you that small businesses are very important and they create a lot of jobs. We don't have really good data on what's happening in terms of small business job creation, although I note that the ADP numbers this morning showed a lot of the bulk of the creation of jobs was in the smaller firms. So I think there is some recovery going on in small businesses, although the confidence is still pretty low. But anyway, the need for credit for small businesses is obvious, and we know from experience that small banks are often the ones that are best situated to provide that credit because they know the customer, they know the community, and so on. So we agree with that very much, and as I've indicated on a couple of occasions here already, we can't solve all the problems. We can't ensure that all the small businesses are financially sound enough to warrant credit. We can't ensure that all the banks have enough capital to make more loans. But one thing we can do is make sure that, or at least try to ensure that the examination process doesn't unfairly penalize lending or discriminate against firms that are potentially profitable but are temporarily in a weak condition.
Are there specific things that you can speak about that address the maybe perceived micromanagement by regulators? Are there steps that are being taken to avoid micromanagement and allowing the smaller banks and all banks to use their judgment and
Absolutely.
make capital available in their communities?
We have provided guidance to the banks and the examiners. We have provided extensive training to the examiners to try to get them to understand in great detail what kinds of considerations should be taken into account and which ones should not be taken into account. We have had various outreach programs like an Ask the Fed, where banks and businesses are allowed to call in and ask questions, and we respond. We've had meetings all over the country with small banks and small businesses, including a capstone in the last summer in Washington. So we have an ombudsman line if anybody wants to call in and has a concern. So we take this very seriously. We're putting a great deal of effort into this. We have also added a new community bank council that will have a member from each Federal Reserve district around the country. We'll meet with the board 3 times a year. We have added a committee, a community banking committee, to our supervision function. So we understand this is a serious problem, and within the limits that we have, we are doing all we can to try to eliminate at least artificial barriers to new loans.
Thank you. And just one final question. With the Dodd-Frank being in the process of being implemented, and there are concerns about micromanagement by regulators, do you think that the costs that will accrue to the smaller banks will make it more difficult for them to survive and thereby be subject to merger and thereby create the too big to fail problem that I think that Dodd-Frank was purportedly designed to avoid?
We'll see, but I don't think so. The Dodd-Frank rules, as you know, are very heavily concentrated, very heavily focused on the larger banks because that's where the systemic risk occurred. So, and there are very few of the rules that are aimed at smaller banks, and we'll be very sensitive as we make the rules to the burden, the regulatory burden on small banks. I think to the extent that we can tighten up the supervision of large banks and also non-bank lenders, actually small banks may see that they have a little more level playing field and may give them more opportunities that they haven't had in recent years.
Thank you, sir.